Welcome to the daily update for Tuesday, February 1st, where we'll look at the action in the market today and then see how things look for Wednesday, February 2nd. We did see some continued buying, so the technical picture is improving now. And as I go through the charts, you'll see that we are looking more positive. It doesn't necessarily mean that things are going to go straight up from here, but at least as things look right now, we're coming up out of that base. First, we came out of the large caps on Monday. Then we saw some follow through on Tuesday with the small and mid caps also starting to come up out of that range. So it is looking more positive. We're still negative overall, but the picture is improving. So just to make an announcement, I do have a Facebook private group that you're welcome to join. It's free, but it will be moderated. We just want to keep things on task. We want to really fight against any self-promotion as far as, I don't mind if you have a program. I don't mind if you're a teacher. What I really want to keep is the garbage out. And we want to avoid politics. Again, we live in a very politically charged environment right now. And so we just don't want arguments going back and forth that really don't feed into what we're trying to do here. We want to keep focused on the stock market, the financial markets, and specifically the S&P 500. We want to have some spirited and lively discussions. No question is stupid. No question should be too advanced or too simple. If there's something that we don't know, we can have a discussion about this and do some research and try to come to some conclusions. We will have the opportunity for Q&A if you want to ask me questions about the class that I offer and some of the other classes that are not on YouTube right now, but that I do teach. You're welcome to ask those questions. And then we could even do some live broadcasts if there's something going on, a particular event or something happening that you do find interesting. And the best way to contact me is either find me on Facebook, John Clay, C-L-A-Y, or email me at john@spxinvesting.com. And I have to pause this while I battle the cat. You know, cats are just like kids. You can be in the same house all day, and if you're quiet, they're quiet. But the minute you get on the phone, the minute you start talking, the minute you want to do something, suddenly they need all of your attention. Anyway, that's just a little side note that I thought I'd mention here. Let's go back over what happened on Tuesday. In comparison to what we've been going through the last week or so, it was a pretty slow day. We did have a slightly higher open, but then we saw some initial selling, which is not necessarily surprising. There was really no gap from Monday to Tuesday, but some people are still nervous. And if they see that we have a positive open, they want to go ahead and sell into that. We saw a little bit of it, but it didn't get too far out of hand. As the day went on, prices rebounded up a little bit, and we stayed near the unchanged level for most of the session. We didn't really drift up or down from there. We just kind of danced along that line. One possibly encouraging thing is we did not see selling into strength. As prices went up, we didn't see the overall tendency for people to want to get out of their positions. During the close, this has been positive, and we saw this on Friday, we saw it on Monday, we saw it on Tuesday, where we saw increased buying going into the close, and prices closed right near the high for the session. That is seen as positive. The amateurs open the market, the professionals close the market. So when we see a lot of selling going into the close, that tends to be more positive. We were up 0.69% on Tuesday. Volume was above average. And the fixation is, can this bounce continue? Well, with each passing day, it's looking a little bit more positive. So the probability or the odds tend to favor, okay, things are starting to improve. and look a little more bullish. We are seeing improving technicals, and that's a typo there. It's not improving, but they are looking better. We're still faced with lots of earnings. The backdrop behind all of this is inflation and interest rates. And then, of course, the ongoing geopolitical concerns, specifically Russia and Ukraine. Some comments that we can say is that we saw continued buying into the close, which is positive. We're still kind of seeing that consensus anywhere from 3, 4, 5 interest rates or possible interest rate hikes are possible. That's not written in stone. We have to see as things develop, as the economic reports come out. This could all change. Just think of where it was a couple of months ago and what the market was anticipating. Well, with some renewed strength and a real rise in inflation, that changed the whole scenario. If things start to slow down, that could change the scenario again. And our technicals are improving, and you'll see that as I go through the charts. We are still overvalued and will likely be overvalued for quite some time. Overall, we're still in a negative trend, but it's looking a lot better. We do have a positive bias. That's usually if we have an up day, the bias is positive, a down day, the bias is negative. Momentum is kind of 2 to 3 days together. So in both of those contexts, we are positive. So let's look at what happened. As far as sentiment, we're not showing any kind of an extreme reading right now. Not a lot of fear, not a lot of greed. We're right about in the middle, which is where we have been now for the last time we really went extreme positive was back in late 2021. As far as the VIX, we're seeing some improvement here. The bar chart, which just measures the close, is starting to drop below the moving average. And another thing that's encouraging is as prices went up near the end, we saw the VIX really start to fall, and it closed again at the end of the session. So we're starting to see a bit of a pattern here. When you see that late day buying, you see fear decreasing, and that really gives more of a positive backdrop. Then looking at the VIX of the VIX, we're kind of seeing the same thing. We closed right near the low on the bar chart, and we're continuing to drop on the line chart. As far as the sectors, 8 out of the 11 were positive on Tuesday. The ones that were negative were staples, which is more of a value play, real estate, and utilities, which had been holding up fairly well. So the other sectors, we saw more across the board with their advances, with energy leading the way, which continues to be the strongest sector. And you can see that. My goodness, since the high set on January 4th, the energy sector has been up over 20%. Discretionary, yeah, it's hanging in there, but it's still the weakest sector of all. As far as inflation, the BDI saw a little bit of a tick up today. So this isn't really telling us too much other than at some point in the future, we'll be able to look back and see, was this chart really helping us? Technical alerts, we saw a lot of positive and a few negatives. As far as the S&P is concerned, we did drop below 4,500 there for a while, but we were able to cross back above that. And that's pretty much all as far, the bullish percent index crossed back above 50. And you'll see that in the chart that I'm going to go through here in just a moment. So we're looking okay with things. The NASDAQ is seeing a lot of technical alerts, which is also positive. Tech saw a bullish MACD crossover. So some of the signals that we'd like to see in a more positive environment, that's what is happening. Looking at our intraday chart, you can see from Monday to Tuesday, we didn't have much of a gap, either to the upside or downside. We did open positive, but then we saw some initial selling. We came down to the pivot. Things drifted sideways, and then we got back up to the unchanged level for quite a while, but then what's more encouraging, at least if you're bullish, is that near the end of the session, we did see renewed buying, and we ended up closing near the high for the day. We're still coming out of this base that was formed last week. So that is seen as positive. We're still above the support that we had from the October lows. Now we're going to have to see if buying continues. Can we start to put back in a series of higher highs and higher lows as we try to go back up? We are above the pivot level for February, so that is also positive. We're down currently 5.21% since the all-time high set earlier in January. Growth saw a little bit of a decline, and value saw a little bit of an advance overall on Tuesday. The NASDAQ 100, again, it's very tech heavy, so we saw a little bit of a decline when you compare it to the S&P 500. As far as our trend, the selling pressure is coming down. The buying power is coming up. We're seeing a bit of a rollover because the trend that was getting picked up by the ADX was a downtrend. And if we start to go up, that means that the trend will eventually weaken, and it could go into a sideways pattern. Or if things really turn positive and the green line goes above the red line, that would switch everything back to positive. And then if we see the ADX turning up, that would signal a stronger uptrend. But we're not there yet. We're just playing out how this might develop. As far as our breadth, even though we didn't see a lot of new highs, they were positive, both based on price and volume. So our longer term measurements are showing improvement. The ratio for the advanced decline, it's just a little bit positive now. So that's what we wanted to see. If we're more positive, we come up out of this extreme negative reading, and now we're getting above zero, and the blue line, and the blue line is now above the red line. New highs and new lows, we did see an increase in new highs, but not anything really significant. We're going to need to shoot back up higher for a lot of new highs to be generated. And with our trend indicators here, we're still negative, but turning up ever so slightly. The 10-day moving average continues to fall. New highs and new lows. What I pointed out in yesterday's video actually happened. We saw an extreme negative reading down here after hitting an all-time high. And if this is going to stay more in a positive environment, once we hit those extreme readings with the new highs and new lows in the S&P, we want it to come back to zero or above for that positive backdrop not to be compromised. Well, that's what happened. We actually went positive after Tuesday's session. So this just feeds into the idea that things could be improving. Then with the accumulation distribution line, we crossed above the moving average on Monday. Well, we're still above that with Tuesday's advance, and the line is starting to flatten out a little bit. What would be more positive is to stay above the red line and to see this line start to turn up. As far as our short-term look, we're coming back up into the moving averages. When we're looking at the 20-period moving averages, it would be more positive if the blue line was able to cross above the red line. We're seeing a real improvement with our 20-period moving average. That's coming up. 50-period is turning up, and 200-period is turning up. So this is really showing some improvement. As far as our different moving averages, we're above the 200-period moving averages. Now we're starting to get back into the shorter term moving averages. We were able to get back above the 20. Now we want to see, can we get back above the 50? Can we get back above the 100? And if all of these moving averages start to turn back up, that would be more positive. Same thing we're kind of seeing here on a little longer term scale. Above the 50 period moving average is bouncing up. 150 period moving average is coming back up after giving an extreme reading. And the same thing is true with the 200 period moving average. And then I'm going to pull out a few of the momentum oscillators that we look at. I always look at the MACD every day because so many people use that. We're seeing a lot of improvement. The histogram is really starting to come up, but we have not crossed yet. If we have another positive day, the MACD could turn positive. Our short-term oscillator, we're above 0 now based on price and volume. The McClellan oscillator did finally turn positive, which now means the summation index is turned positive. So that's showing an improvement. The stochastic RSI, which is very sensitive, it's already into overbought territory. Then our one-day rate of change. I made a note of this in yesterday's video that we climbed pretty fast. Well, because we didn't have the rip-roaring day on Tuesday that we saw on Monday, the one-day ROC is really starting to come down. So it's more in neutral territory now. And that's positive. We want to see an up day. If you're bullish in the market, we want to see this really come down off of an extreme reading, but price is still going higher anyway. Looking at the 5-period rate of change, now this is starting to be a little bit of a concern because we're going up pretty fast and we're in extreme positive territory now. When we look at the 10, we're still below 0. So a little further out, things haven't improved. They've improved a great deal, but they're not showing an extreme reading. And the same thing is true with the 20. It rolled over a bit on Tuesday. The 50 period had a slight increase, and the 200 period is coming up. So we're showing some improvement. On a short-term basis, we might be a little overextended, but when you get more into the intermediate and longer term, we are seeing improvements. Standard deviation, if we continue to fall, I'll probably stop showing this chart. I'm just trying to point out when we had an extreme reading, well, as things slow down a little bit, we're seeing this indicator come down. William percent R is above 50. That's positive and climbing after giving an extreme oversold reading. Then the boom indicator, they're turning positive pretty much across the board here. Intermediate term, we're still below the 50-period moving average. We want to see these two moving averages turn up and the blue line go above the red if things are turning more positive. Then the PMO study, it's still negative, but turning up. Based on price, it's turning up, and on volume. Our other PMO study, those that are having a rising PMO in the S&P 500, that's improving. Those that are giving buy signals are still negative, but it's starting to turn up. And those that are above 0, it flatlined. So overall, it's improving, but we need to see more follow through if these indicators are going to look more positive. Where we did see positive, and we saw that in the technical alerts, the BPI, bullish percent index, it crossed back above 50. When you're above 50, that's seen as more positive. When you're below 50, that's seen as negative. Then our rainbow, we're still rolling over with our shorter term moving averages, but we're trying to come back through the rainbow itself. And if we can do that, if we can really break above this, that would really help this longer term trend stay more intact. Stochastics are looking better pretty much across the board, short term, intermediate term, and long term. The RSI is just about ready to go above 50, which would be positive. Okay, and I have, for some reason, I have two RSI charts here. So, oh, I'm sorry. This is the longer term one. This is just to give us some historical context. The vortex, it flatlined pretty much with the selling indication and the buying indication. So we're still negative overall on that index. The summation index is turning up just a little bit based on price and has turned up based on volume. And that's pretty good. When you see volume leading price, that can be quite positive. Then our momentum oscillators, and these are a few of these that I'm going to pull out and show you the individual charts. We're turning up slightly with some of our shorter term oscillators. The longer term oscillators still have not really turned, and some of them are showing improvements. The CMF, we're still negative, but if we have another positive day, this could go back green. The CCI, we're above 0, which is now more positive. The ulcer index, it's rolling over a little bit, but is still climbing. And here's a longer term view of that as well. The Copic is starting to turn up. And then longer term, we can see how it came down to a pretty extreme reading, but might be improving. The Sean trend meter, we're getting back up into the area where if we have another positive reading on this and it goes up slightly, you probably won't see this chart for a few days. The Chaikin oscillator, again, this might be the last time for a few days that you see this chart. It is turning more positive. Slope, this is one of the oscillators that I wanted to show individually. We've actually turned positive on slope. That means what is the direction of the trend? And so this is looking better. The MACD is looking a little better. The slope is looking a little better. Some of our other oscillators have some work to do still. And here's just a longer term view of the slope. So we were pretty extreme negative in the context of what's happened over the last 1 to 2 years. The TSI, which is the true strength index, that's also one of our momentum oscillators. It also is turning positive. And you might ask, why do I look at all these different oscillators? They're all calculated a little bit differently. And so sometimes we can see things in one indicator that we don't see in another. Or if we're seeing the same thing across the board, that's just giving us confirmation. As far as our trading systems, the Elder, yeah, it's looking pretty good. We're seeing 2 green bars in a row. And then the SAR has another dot underneath the price action on Tuesday. So this has switched back to positive. As far as our different charts, the Heiken Ashi continues to show improvement. The Kegi didn't change on Tuesday. We didn't see enough of a move for this to really generate anything new, but we turned back to black, which is positive. The Kegi has not drawn any new boxes for the last few days. The 3-line break is also showing an improvement. And our equi volume, because we had an up day, there's a green candle. And we rolled over a little bit on the ease of movement, but overall, this is starting to look more positive. And then we're also seeing more positive things with the point and figure chart. It's actually starting to count out different phases of the trend and switching more to a positive stance, with the longer term blue line showing the uptrend is still intact. As far as the long term, here's the S&P and the equal weight. The special K, which is very slow, it still continues to decline. And then here's the longer term version of that same indicator. So you can say in the background, we're seeing some negative things, but looking at other indicators, there are some positive things. That's why I say the longer term trend could be weakening, because we're not seeing the same thing across the board. Then the TSI, okay, this should have been in a different place here. Well, let's see. The trend strength index, again, is showing some improvement. Okay, that was in the wrong place there. Then looking at the small, medium, and mid caps, we're still shooting up out of that base in the S&P. The mid caps, yeah, we're seeing a bit of a breakout. And small caps, they're still in this range over here, but showing some improvement. The FANG stocks had a pretty good day and closed near the high. They were up 1.13%. ARC had a good day, up 2.19%. These are all very tech heavy, growth oriented. The industrials, yeah, we came above the pivot line. We're above the 200 period moving average. Now we're going to see if we can get above the 50 period moving average, or if that will act as resistance. Small caps, they're looking better, but they're still kind of range bound. Where the mid caps are starting to break out, but we have the pivot right above where prices are currently. NASDAQ also trying to break out, but we have overhead resistance with the monthly pivot. NASDAQ 100, same thing. We're trying to break out, but there is some overhead resistance, and we're also dealing with the 200 period moving average. So things could drop back from here. And depending on the intensity of that, we'll have to see, is that going to change the climate? The positive things that we're seeing, are they going to switch back to negative? Or if we see some real strength going through these overhead resistance levels, that could be quite positive. Looking at the VIXN, it continued to drop as the NASDAQ 100 went up, and we closed right near the lows. That's positive. The NYSE composite, we're right back at the 50 period moving average. So we're seeing a real convergence of different potential resistance right now. The Wilshire came back and is actually a little bit above the pivot and still below the 200 period moving average. All stocks came back above and actually closed a little bit above the 200 period moving average. Looking at our international indexes, China's starting to roll over, but again, they're going to be closed pretty much this whole week for their spring festival. Emerging markets are starting to show some weakness. Europe, weakness. Japan, weakness. The US, weakness. So there's still some real weakness in the background, not only in the US, but globally. Some other broad markets, copper going sideways. The dollar, which had a great week last week, well, it's seen a couple of negative days now, and we're back into the 96 area. And here's the weekly chart. Not really any technical damage yet. We want to stay above this blue moving average for things to remain more positive. But overall, the trend remains up. Oil was up just slightly, virtually unchanged, but up just a little bit on Tuesday. Gold still continues to flounder in a range, and we just had a recent death cross where the blue line crossed below the red. Now you may come up with something different. These moving averages are simple moving averages. Other people like exponential moving averages. So your crosses may be a little bit different if you're using some kind of a charting program. Palladium, which I always like to keep an eye on, was down just a little bit. Silver, which is seeing a little bit of a bounce right here. CRB was up on the day, which could again be feeding into some inflation concerns. And then going back on an intermarket analysis basis over the last year, oil is strongly in the lead, seeing a bit of a rebound in the S&P. The dollar is kind of pretty much going sideways. Gold is not really doing much, and bonds have really been getting hit. Then just to look at Bitcoin, saw a bit of a bounce on Tuesday. Last time I looked, it's just kind of treading water sideways. And then this, again, this chart is different. This is the based on New York prices. So it doesn't take into account overnight and weekend trading, but because a lot of these people that trade this market don't have a lot of experience, they're going off of this moving average crossover type system, which is an effective system. Well, last week, based on what you look at, there was this death cross that everyone was all freaked out about. Well, because this chart doesn't have as much information in it, we're getting right to that point now. So that could be another confirmation that Bitcoin is still having some trouble. And there's a lot of really negative news about Bitcoin and cryptocurrencies in particular right now. As far as bonds, just saw a little bit of an uptick with interest rates on Tuesday. And then here's our yield curve chart where it actually, excuse me, it actually went back up slightly. We want to have an overall idea of what direction is this going, and then we really pay attention when it gets down below this blue line. International interest rates, yeah, Germany is finally deciding to go back positive. But overall, bonds are still in a pretty comfortable downtrend. So what's our outlook? The technicals are improving. The short and intermediate term continue to rebound after coming off of that oversold condition. Small and mid caps are trying to break out of last week's range. The long-term trend is up, but showing signs of weakness. We're still in the middle of earnings season. This should be Wednesday's economic reports. We'll see the ADP employment change. And I'm still trying to work out how I want to display the economic reports each week. So that look for that to change in future videos. And then we also have the continued geopolitical events between Russia and Ukraine and a host of other things. We have the Olympics coming up, which is an international event. Just lots of different things. Super Bowl is coming up pretty soon. Again, these aren't stock market moving events, but they're more things could always happen type events. So what is our conclusion? The S&P continues to be in a downtrend, but is improving. Short-term bias, or even trend, you could say, is positive. Intermediate term is negative, but improving. Long-term remains positive, but still showing signs of weakness. So thank you very much. Have a great Wednesday, and I'll talk to you again on Thursday.